Local inflation appears to have slowed a tad. Stats SA data shows that the November Consumer Price Index rose by 7.4% year on year. That's a slower pace than the 7.6% recorded in October. The latest reprint was driven by food and non-alcoholic beverages, housing and utilities, transport and miscellaneous goods and services. The latest data comes as global inflation numbers are also seen coming down. Well, to discuss the latest data, I'm joined by Dr Azar Jammine. He's the chief economist at Econometrix. Thank you very much, Dr. Jammine, for joining us. So this looks like a positive slowing trend, but what were the overall drivers of inflation this time around? And are there any concerns around certain persistent inflation that you're seeing?
The main contributors towards inflation in recent months, without a doubt, have been food and fuel. Those have been driven by global exogenous factors, including the war in Ukraine. What contributed towards the fall-off in inflation in November specifically was mainly a decline in fuel prices and a comparison against a very high rate of increase in fuel prices a year ago. So that is encouraging that fuel prices are coming off the boil. Having seen oil prices dipping sharply in recent days, one can expect that trend to continue for at least the next couple of months. On the negative side, food inflation remained quite elevated and rose to a new multi-year high of 12.8%. One had been hoping that food inflation would start dipping in the wake of a moderation in food prices of key commodities such as wheat and grain internationally, following the agreement by Russia to allow Ukraine to resume exports of those commodities. But it hasn't yet filtered through into reducing our own domestic inflation.
Yeah. So, Dr. Jammine, globally, it does look as though there's a downward trend in inflation. Is this a product of the high interest rates that we've had to endure?
I suspect the high interest rates are an important factor, and what they are doing now is inducing an expectation that global economic activity will slow and that demand as a consequence will reduce. And that is starting to cause mineral prices to moderate as well. On the negative side, of course, that means that we may start receiving less for our exports of those minerals in months to come.
So I think you've touched on it a little bit, but how do you see inflation evolving as we head into 2023? And also, how do you think the Reserve Bank is going to treat the inflation data as it slows, hopefully continues on a slowing trend? Can we see actually halting interest rates in 2023?
The expectation at the moment is that inflation is indeed on a downward path. The big question is how fast and how fast is it going to decline? And that is what is obviously influencing the minds of central banks in determining just how much further to raise interest rates. Because if they carry on raising them at the pace at which they've been doing in recent months, they will almost ensure a recession at hand in 2023. So there is hope that the rate of increase in interest rates is going to slow. The first example of that may well be tonight. The US Federal Open Market Committee decides on how much to increase the Fed funds rate in the US, and the expectation is that for the first time in 5 meetings, they will slow it to a 0.5% increase instead of a 0.75% increase. And similarly, I think the South African Reserve Bank will also slow its rate of increase in the repo rate in January to at most 0.5%, maybe even 0.25%, compared with what the 0.75% increases that we've had on a regular basis in recent months.
Yeah.
After that, there is indeed hope that interest rates may not need to increase any further. As to when they start coming down is a more difficult issue. There is no consensus at the moment as to whether they will indeed start coming down later next year, but there is a reasonable chance that that will happen.
Yeah, we wait and see. And like you say, I mean, central banks right around the world can't really afford to be hiking up rates to an extent where they actually cause a recession, because that creates other problems. But just on another topic, but it is related to the economy, what sort of calculations have you been doing around the impact of load shedding on the economy, especially as we've been experiencing higher stages? I'm sure it's something that you're looking at constantly. What is your conclusion about the level of load shedding that we've been experiencing and how it's going to impact economic growth?
Spot on, Nompu. I've been fretting about it over the past week, especially in light of suggestions being made from Eskom itself that this intense level of load shedding could well be with us through most of next year. And they're fighting to try and reduce the stages of load shedding by 2 stages if they can get the open cycle gas turbines working again, importing diesel. But they need to reach an agreement with Treasury to be able to fund this. At the moment, they don't have the money to do that. But beyond that, there is obviously a crisis. We know that we are working on renewable energy sources to come on stream to try and rescue the situation in over the next couple of years. But I think it's going to take at least a couple of years for that to happen. In the interim, we're looking at a high level of load shedding for an extended period of time. And I am questioning whether we will have any growth in the South African economy next year whatsoever in light of that high level of load shedding.
Very worrying indeed. And then lastly, I mean, I can't have somebody as senior as yourself speaking to me and not throw forward to the ANC elective conference. All the noise is about the leadership, but obviously from your perspective, you're going to be looking at what's happening on the policy front. What is it that you're going to be looking out for, and what are you hoping the ANC is going to bring clarity on around the economic policies?
Look, in the past, the ANC economic policy conferences in the past have often given their commitments to doing this, that, the other, and none of those have really actually materialized. So I'm not all that worried. I think we're going to have another round of rhetorics to see the affirmation of the introduction of a basic income grant, the introduction of expropriation of land without compensation, the introduction of a national health insurance scheme, the nationalization of the Reserve Bank, and such like measures. But fortunately, which are very populist and appeal to the masses, but actually can be very destructive if carried through with the vigor that they are meant to do, because the government just doesn't have the money to introduce many of these measures. It just doesn't have the money to do so. And that reality has dawned on the Treasury, and that's why the Treasury has been holding back somewhat on being vociferous about the introduction of all these policies. Having said that, I think a re-election of President Ramaphosa will send a positive signal to international investors that the commitment to structural reform, to fighting corruption, to implementing infrastructural investment programs, to reforming and restructuring state-owned enterprises so that they become more effective and viable, which has been on the agenda of the president. At least those will carry forward if he is re-elected. The big question is, will his re-election give him will he see it as a mandate to pursue those reforms more aggressively than he has been doing in the past, instead of looking over his shoulder always at the RET faction, which actually votes against many of these reforms within the ANC alliance?
We wait to see. Thank you so much for your time and insights. As always, Dr. Azar Jammine, he's the Chief Economist at Econometrix.